Alright guys, first trade on the account. And it went pretty well, I won't even lie to you, but I didn't document the actual trade. When I was in the trade, it was just after the fact, of course. I'm gonna go over the analysis. I'm gonna really break down why I even took this trade in the first place and how I even got to that confluence. But as you can see here, we sold for, this was the on the 3 minute, the original trade idea, like that. And I did move my stop a little bit higher. I was like, all right, it should be around there. We shouldn't be having too tight of a stop loss. And of course, entered a little bit late. I didn't want to wait for the limit order. I was a little anxious, of course, like always. And my original take profit was all the way down here. I was originally aiming for a 1 to 2, but I was thinking in my head, I was like, yeah, ain't no way this is gonna be a 1 to 2, because just on the 1 hour, the 1 hour was looking really, really, really bullish. But yeah, we're gonna go over this trade idea. So we did hit for a 1 to 1. We were risking close to 1% around there. So yeah, it wasn't really that bad in my honest opinion, but it could have been better, honestly. With the trade idea, it could have been a lot better. Just from like managing the trade, not really entering the trade, was just more managing, because like it was really just an emotional battle I was dealing with while in the trade, because you can see we faced drawdown and then we hit profit, and then eventually I took it out due to emotions. That wasn't really a logical way to take it out, but I just took it out. This should have been the main take profit, honestly, but I just took it out a little bit earlier, because we did see this 3 minute, order block or mitigation block hold, and it looks more of like an order block than mitigation to me. But yeah, it just didn't reach the 50%. We swept the low, we started moving up higher, and this was equilibrium right here of this 1 hour range. You can see as soon as we hit the equilibrium, we bounced. So let me get to a clean chart real quick for y'all. So let's get to a clean chart. Let's zoom in. All right. So if we look at the weekly, so I do have another chart where I see the weekly chart. Let's go right here. So like on the 1H, every time I'm looking at the weekly power 3 and how we're forming that weekly power 3 with the profiles. Like, okay, Monday we opened up, moved the power. Tuesday we took out Monday's high. Now Wednesday, what are we? We're inside of Tuesday's and Monday's range. We're not really breaking out. We're in between. And this power 3 on the weekly looks a lot bearish. Why? Because it's a wick. It's a big wick. We're not really moving up higher. And if we were to move up higher, it would not seem ideal for the weekly profile to go up straight up. Like we usually, the weekly profile, if we're going to open up and be bullish for the week, we usually have that manipulation to the downside the first 3 days, either creating the low Tuesday or Wednesday, and then we move up higher. Simple stuff like that. Using it all to your advantage, though, as a confluence, in my honest opinion. And on the weekly time frame, you can see we're gapping down. Like we're, of course, bearish from a higher time frame perspective. Of course, a lot of people are talking about it, like, oh, we're in a recession, blah, blah, blah. So it's only, makes sense to do that. And then on the daily time frame, we also had this daily SIBI, which was nice, honestly. And then you can see we're just rejected, moving lower. On the 4H, this is kind of where my main confluence was. On the 4H, though, we had a 4-hour SIBI here. You can see we were rejecting off of it on the 1H. On the 4H, we also were forming CRT here. So we trading the advanced CRT right there. That's kind of another confluence. But on the 1H, we had this range right here that we were, inside of. And this is kind of where I was like, all right, we're either going to bounce and respect this 1 hour range, or we're just not going to respect it. And we're going to move down lower. We're going to disrespect equilibrium, which is, again, the 4 hours, the higher time frame confluence, but the 1 hour range is also very important because it dictates like the lower time frame too. Because lower time frame confluences go off of both of those time frames, but of course the higher one always gets respected. But it just doesn't go straight down. The market doesn't, simply shoot all the way down unless there's like a news event. But it slowly climbs its way down. It comes back up, comes back down, goes up, goes. It makes higher lows, higher highs. All that, lower highs, lower lows, all that. Yeah. And then on the 15, this is kind of a little bit of a miscellaneous time frame, honestly. It wasn't really much of a confluence on the 15. We didn't really have much here other than we didn't really have much on the 15, honestly. The 5 minute was more of an important time frame to me with the 3 minute. So the 5 minute did have a 5 minute inversion fair value up there. On the 15, we don't really have much here. So again, the 15 could have been a lot better, but we were sweeping these highs right here. And we did also sweep these highs from London. So we swept both the London's highs right then and there. So, I was looking for the market to reject, start moving lower since it completed the market make a buy model. We completed the market make a buy model. We're inside of a higher time from PDA rate that's bearish. What are we likely to do? Retrace, move down lower. It's only right. It's only like rebalance the equilibrium, And then, so on the 5 minute, we had that 5 minute inversion. And we also had a 5-minute change in the state right here. As soon as we swept the liquidity, that was your 5-minute change in the state right there, and it did get respected. So this is why it's important to have a good stop loss, have those 3 PD arrays as your stop loss, because if I simply had it at the inverse right here at this high, we would have got disrespected, you know. And if we didn't use the order block here, moving the stops up here, we would have been out, you know, and we would have lost 1%. But we played it safe. We, you know, had that stop loss, and you can see it on 3-minute too. Is also like a 3-minute change in state. Looks really nice. We had 3-minute CRT there. Boom. We rejected. Started to move lower. We another confluence that I was using here was on the 1-minute was the BPR of the range here. I was looking at this right here. So this was my little range I was looking at. So we broke above it, came back down, rebalancing equilibrium, not really going below. And this is kind of where I was like, okay, if we don't stay below, probably going to come back up. We did come back up. And then eventually we had a new range form, which was right here. And you can see we're chopping around. We broke above it, and then we came back below. And once we came back below, we didn't really go back above it. You can see the candles never really closed above. And then we started to move down lower. And that's kind of where I knew the market was going to, you know, start moving down lower. Once we had those ranges play out, you know, ranges like BPR, balanced price ranges, are like very, very important to me, because they just give me like that more sense of confirmation that the market isn't really going to go back up and is going to continue back down below a certain, you know, range. You know, it's weird to explain, but I've been using them a lot more, and they've been helping me a lot more recently. And then we just moved down lower, came back, hit the equilibrium, and we also hit that 3-minute, you know, order block right around here. And that's kind of where, you know, the trade idea was just cut right there. And we did originally enter like around here somewhere, and you know, the stop loss, I did trail it once we started to move down lower down here, and I was like, okay, we're in profit. I just closed the trade around here because I have other things to do, you know. I gotta go to work soon, and it wasn't worth the mental capital holding it, because eventually we would have went back up. But this also would have been a nice trade idea too. Once you had that change in the state, you probably flip a 3-minute fair value gap or something, or a 5-minute. You could take that off also. So it wasn't a bad trade idea. It just wasn't really the one I would want to take. So you could take that right there, aim for these highs up here or something. And yeah, it's not really that bad. But more inside of a range now, I really would want to see the higher low, the high of the day, or the low of the day get swept tomorrow, and then try to find a trade idea, you know, previous day high, previous day low, seeing that, or seeing just how the weekly profile is forming. Trying to trade something inside of it, like a PD array, higher time frame one. Again, I'm not really trying to trade lower time frame. I'm trying to have more of that higher time frame perspective and using it to my advantage on the lower time frames. So that was pretty much really it. And you can see on the account we're pretty much up 0.4. We're up like near 1%. So yeah, not really bad for the first day of or first trade back. Again, I'm not really trying to trade, you know, on low probability days. Like the other past 2 days, I just wasn't able to. I'm not trading Monday. Tuesday I was looking at it, but it was already moving down too much, and I just wasn't really watching the market at the afternoon session. I was watching through around 9 through 10, and it just wasn't really probable. And then I had to go to work around 12 o'clock my time, so that's around, you know, 13 o'clock here. The market was already moving. I was getting ready. You know, I can't watch the market 24/7. I have to go do other things, drive there, commute, all that. So yeah, and then that's pretty much really it. So that's pretty much the trade idea. Nice quick scalp 1-to-1, and just gonna review journal and then probably continue to do that. So yeah.